Welcome to today's podcast, the show where we break down the biggest stories in tech, media, and culture. I'm your host, Nate Nead, CEO of Marketer.co and SEO.co, and today we're diving into the fascinating and complex year Spotify had in 2023. From record-breaking growth to strategic layoffs, from bold investments in podcasts to the challenges of profitability, Spotify's story this year encapsulates the highs and lows of the streaming industry. But here's the real question. Is Spotify on the cusp of revolutionizing audio entertainment again? Or is it teetering on the edge of overreach? Grab your headphones. It's time to unpack the drama. Let's start with the numbers. Spotify hit a whopping $13.1 billion in revenue in 2023, with 236 million premium subscribers and 602 million total monthly active users. These are record-breaking figures, reinforcing Spotify's position as the global leader in music streaming. But beyond the numbers, what do these milestones really mean? Well, they're a testament to Spotify's ability to scale and dominate, thanks to its freemium business model. By offering free ad-supported streaming alongside premium subscriptions, Spotify has created an ecosystem that appeals to both casual listeners and audiophiles alike. Back when Daniel Ek and Martin Lorenzon launched Spotify in 2008, the idea of a freemium model was almost laughable. Who would pay for something they could get for free? But Ek was adamant. He once said, "It's not about selling music, it's about rethinking how we experience it." That vision turned out to be revolutionary. This growth is also a testament to Spotify's robust data-driven approach. By using sophisticated algorithms and user insights, the platform consistently delivers personalized recommendations, keeping users engaged and ensuring customer loyalty. What's fascinating is how Spotify has leveraged data. Its personalized playlists, Discover Weekly and Wrapped, aren't just features. They're cultural phenomena. These innovations have not only kept users loyal, but have also set industry benchmarks. But 2023 wasn't all smooth sailing. In a surprising turn of events, Spotify went through 3 rounds of layoffs this year. The largest round came just weeks before the company announced its record revenue and user growth. These layoffs were concentrated in its podcasting division, a core part of its ambitious audio strategy. Let's unpack this. Since 2020, Spotify has poured over $1 billion into podcasts, acquiring big names and platforms like Gimlet Media and The Ringer to fuel growth. Yet, by 2023, it was clear that the strategy needed rethinking. Some say Spotify bit off more than it could chew. Others say they were trying to swallow the whole apple. Either way, podcasting proved to be a tougher nut to crack than they'd anticipated. The layoffs were part of a broader effort to streamline operations and cut costs. Experts suggest that Spotify's rapid expansion into podcasts resulted in inflated costs that outweighed revenue gains. And let's be honest, monetizing podcasts isn't as straightforward as slapping ads on songs. Take the story of an indie podcast producer who sold their show to Spotify, only to be laid off months later. They've since built an independent network that's gaining traction, a true tale of resilience in a tough market. Let's talk about money. Despite its growth, Spotify reported an operating loss of $446 million in 2023. This might sound alarming, but investors seem to appreciate the company's shift in direction. Spotify's market capitalization doubled this year, signaling faith in its potential to achieve profitability. Imagine telling Wall Street, "We're losing hundreds of millions, but hey, trust us." Somehow, it worked. This pivot isn't just about cutting costs. It's about restructuring to maximize value from every user, whether they're free-tier listeners generating ad revenue or premium subscribers. Investors seem to believe in X's long-term vision, even if the short-term numbers look shaky. Spotify's focus on efficiency reflects a broader trend in the tech industry, where companies are prioritizing profitability over growth at any cost. For Spotify, this means doubling down on core strengths while reevaluating high-risk ventures. One of Spotify's defining features in recent years has been its push into non-music content. Podcasts, audiobooks, and now AI tools are central to its strategy. These efforts aim to differentiate Spotify from competitors like Apple Music, Amazon Music, and YouTube Music. Could Spotify's AI-powered recommendations or experiments with NFTs set it apart in an increasingly crowded field? Only time will tell. Although, if AI starts recommending bagpipe audiobooks during your workout playlist, we might have a problem. Spotify's investments in AI aren't just about improving recommendations. The company is also exploring ways to enhance content creation and monetization through AI-driven tools for artists and podcasters. TikTok's success demonstrates the power of social media in shaping music trends. For Spotify, integrating similar discovery features could be a game changer, keeping it relevant in an evolving market. Spotify isn't just competing with streaming giants. Platforms like TikTok are redefining how people discover and engage with music. In response, Spotify has experimented with short-form video and other innovations. The music industry of the 2020s is a dynamic landscape, with artists, labels, distributors, and consumers all influencing its direction. Spotify's journey reflects these shifts, a mix of opportunity and challenge. Here's a fun tidbit. An indie artist who blew up on TikTok once said they only found their song on Spotify because their fans sent them the link. The platform might need to rethink how it engages with viral trends. On the plus side, Spotify's massive library and user base give it an edge. On the downside, staying relevant in the face of fast-evolving platforms like TikTok is a constant challenge. Beyond business metrics, let's consider Spotify's social and ethical footprint. How does the platform treat artists, and what's its responsibility in shaping the cultural conversation? Some artists have criticized Spotify for low royalty payments, arguing that the platform prioritizes growth over fairly compensating creators. At the same time, Spotify has launched initiatives like Spotify for Artists to empower musicians with tools and insights. Does Spotify strike the right balance between serving consumers and supporting creators? Or is it just another tech giant squeezing margins for maximum profit? One indie artist reportedly used Spotify analytics to pivot their music style, eventually landing a major record deal. It's a testament to how creators can thrive with the right tools, but it's not a universal story. Looking ahead, what's next for Spotify and the streaming industry? Will Spotify continue leading, or could it be overtaken by a disruptor? With ongoing investments in AI, new subscription tiers, and a push into emerging markets, Spotify is betting big on innovation. But it's navigating a complex, competitive landscape where agility and focus are critical. Spotify's 2023 was a paradox. Record highs paired with difficult decisions. As it strives for profitability, it's clear that the company is at a pivotal moment. Will these strategic shifts pay off? We'll be watching closely. What do you think about Spotify's future? Share your thoughts with us on social media or leave a comment. Don't forget to subscribe for more episodes where we unpack the biggest stories in tech and culture.